It's firmly in focus because of the real trading volume the platform continues to process, the fee generation that supports the token, the broader narrative around on-chain perps and high-performance L1s, and the simple fact that any protocol capturing meaningful trading activity still draws heavy attention. If this is useful, hit the like button, subscribe if you haven't already, and leave a comment with your honest take on Hype. I actually read them. Looking at ratings and signals, short-term scanners have turned more cautious after the rejection from recent highs, while longer-term and fundamental-leaning views remain more constructive because of the platform's volume and fee metrics. You will see a mix of hold and mild sell readings on pure momentum tools, balanced by the still strong relative ranking and on-chain activity. Funding and open interest in the derivatives market stay elevated given the volatility and the nature of a high volume perps platform. The short term outlook from pure technical sources is more defensive until price can reclaim and hold above the recent resistance cluster with conviction, while the broader narrative around the protocol remains one of the stronger ones in the market. What's going on with Hyperliquid right now? The chart has pulled back from its recent highs, some short-term sell signals have appeared, and yet a lot of people still argue this thing remains one of the stronger stories at these levels. How do those two views line up? Let's talk about it. Hyperliquid is a high-performance layer 1 blockchain purpose-built for on-chain perpetual futures and high-frequency trading. It aims to deliver CEX level speed and experience while keeping everything fully on-chain with its own native order book and matching engine. Hype is the native token used for gas, staking, governance, and it benefits from a portion of protocol fees being directed toward buybacks and burns. It currently ranks inside the top 10 by market cap with substantial daily volume, and the price has been trading near the levels you're seeing after a strong multi-month run and subsequent consolidation. On the technical side, the bigger picture shows a clear multi-month uptrend that has more recently entered a consolidation or corrective phase. Price has made a series of higher highs and higher lows over the larger time frame, but short-term action has produced lower highs and tested support after the latest push higher. Momentum indicators cooled from the more extended readings seen during the strongest parts of the run, and volume has remained elevated relative to most other mid to large cap names. Moving averages on the higher time frames still lean constructive, while the shorter time frames look more mixed. Short term, it feels more like a digestion of gains than a full trend reversal. You can argue the larger structure remains intact as long as key support holds, but the immediate picture has become more range bound and reactive. Here's the real debate. Is Hype still undervalued or fairly valued after the run, or is the current level starting to look stretched? One side points to the real perpetual trading volume, the fee generation and buyback mechanism, the high performance design, the relatively clean tokenomics, and the idea that on-chain perps infrastructure could continue to take share from centralized venues. They argue that if volume stays robust and the fee flow to the token continues, the current market cap could still leave room. The other side says look at the valuation and the recent price action. After a strong multi-month advance, the token is no longer cheap on an absolute basis. The fully diluted valuation is elevated relative to many other L1s, and any slowdown in trading volume or rotation away from high beta names could pressure the price. Bull case versus bear case is relatively clear. Best case, perps volume stays robust or grows. Fee revenue continues to support buybacks. The broader high performance L1 narrative strengthens, and price manages to reclaim the higher levels of the recent range. In that scenario, the larger uptrend can resume. Worst case is a deeper consolidation or correction if volume cools, attention rotates, or broader market conditions turn risk off. In that scenario, the token could spend time grinding lower or sideways while the market reassesses the valuation. That's the tension. The product metrics are real and among the strongest in the sector, but the market has already rewarded the story and is now more sensitive to any loss of momentum. Retail often gets caught on both sides here, either chasing the narrative too late or underestimating how quickly attention can shift even for projects with real activity. Risks are still meaningful. Volatility remains high. A broader risk off move, a drop in Perp's volume, or increased competition from other high performance venues can hit the token. Downside is open if the current support zone breaks and the correction deepens. Even projects with real usage can experience multi-week or multi-month drawdowns after large runs. Liquidity is excellent relative to most names, but that doesn't eliminate sharp moves. There's also the competitive and execution risk that comes with any specialized L1. The platform has to keep delivering speed, reliability, and volume, or the edge erodes. Short term, the picture still looks more consolidative and reactive than strongly impulsive. You need to see stronger volume and a clean reclaim of recent resistance before the short term bias flips with real confidence. Longer term, it comes down to whether Hyperliquid can continue converting its trading volume and fee generation into sustained demand for the HYPE token. That's the path that keeps the current levels looking constructive rather than extended. Nobody knows which way this resolves. The platform metrics are real, the fee mechanism is active, and the market has already given it a top 10 ranking. But the chart is still digesting a strong run. So the real question is simple. Is this the kind of project that can keep expanding its lead in on-chain perps and push through the current consolidation? Or are we watching a high usage name settle into a longer digestion phase while people debate whether the valuation still has room?